Welcome to Trisha's Thoughts. My name is Patricia, and today we're going to talk about that one topic that many people don't like. You don't want to hear it, you don't want to think about it, you don't want to dream it, you don't want anything to do with it. Taxation. Unfortunately, or fortunately, it's part of life. I would like to specifically focus on the auto assessment that has been introduced by SARS for individuals. For those who don't know, our tax season is starting on the 1st of September 2020. What SARS has done, they've gone before us in this month, August, to automatically generate what they're calling an auto assessment. This auto assessment, once they have created and they've generated and they have concluded that you either owe SARS this specific amount of money or they owe you that specific amount of money, they send those individuals an SMS just letting them know we have done an auto assessment, and based on our auto assessment, we think you owe us this amount of money, or they owe you this amount of money. You will get a refund, or there's a tax payable, depending on the calculation and the information that they have. Where are they getting this information from? They're getting this information from third parties. Third parties being one which has always been your employer. So your employer sends an RP5 to SARS saying that, okay, we have paid Patricia a salary for this 12 months of 100,000 Rand. Her tax is this amount of money, and we have paid this tax to you already. This is the information. That has always been the case. And in the past years, SARS has managed then to get information from your medical aid. So that was now automatically generated. Then you would get the information from your employer, the information from your medical aid, how much money you contribute to that medical aid, how many people are under that, beneficiaries are under that medical aid. That would also be calculated, and they had those two information. Then you would have to yourself input the information about your interest, if you've received interest from your investments, if you've received dividends from your investments, if you have sold shares and as a result you have capital gains from your dividends, if you've sold a house and as a result you've got capital gains. SARS, that was expected for you to input and declare honestly on that information. Now for the 2020 year assessment, things have changed. Third parties are now sending SARS directly that information. So what do I mean? The financial institutions are now sending SARS directly that information. If you have an investment with Old Mutual has calculated how much income you have generated for that period. So from March 2019 to February 2020, they have generated the interest that you have earned within that investment. They have generated and calculated the dividends, whether local or foreign, that you have received in that period. They have generated the capital gains that you have received or capital loss that you have received in that period. They pass that information to SARS. Now, whether, for example, local dividends is exempt for income tax purposes, but that still has to be declared in your annual income tax return because it is an income that you have generated in that period. Because now SARS has all of this information, they are able to calculate on your behalf, right, how much tax you owe SARS or how much SARS needs to refund you. However, it's always best for somebody to actually just do your own calculation, do a due diligence, do your own calculation. You must agree with SARS calculation. Don't just click accept because SARS has said we've got all this information. You know the investments that you have. You know the retire annuity funds that you have. You should know all this information. So you should compare what SARS has with what you have. Does it come into an agreement? If it does, then you can click accept. Where do you do that? Either on Mobi app or e-filing, but you need to have the two, either one of the two, right? To accept the auto assessment. Also, the other thing that one needs to consider is what other incomes do you have that SARS might not have on this information? You might have rental income, or you might do a side hustle that you need to declare, and those specific incomes might come with expenses that you are able to deduct, which SARS does not have information of. So now, because there's these specific deductions that SARS is not aware of that you are able to deduct, the calculation that SARS has is not complete. I'll give you a simple example. Travel allowance. Your employer has given SARS via IRP5 information of your remuneration, how much they've paid you, what is the breakdown of that, how much of it is it basic salary, how much of it does it go to medical aid, how much of it is it pension fund, how much of it is it travel allowance, how much of it is it bonus. So it's split, it's divided into the specific sections. It's not just the total lump sum, it's divided into the specific sections. Because it's divided into the specific sections, you know whether one of the sections has or is allowed to receive a deduction. Travel allowance, for example. If you have a logbook and you can prove through a logbook that you have been going to business meetings, your travels are business related, and you have traveled this amount of kilometers, you are able to get a deduction. A deduction is calculated based on a formula using your logbook and other factors that SARS has put in place. And that deduction can reduce the amount that you owe SARS, or it can increase your refund. But the point is, then you would need to actually do the calculation of that deduction. Now, if you don't do that, and SARS has done the calculation without having the deduction into account, you might lose out. An auto assessment might be a good idea for somebody who the only income that they have is their salary. They know that the only income that they have is their salary, and their salary is basic salary, meaning that there's no travel allowance, there's no fancy fringe benefits that might result into an opportunity for you to actually claim a deduction. Then that is fine. For somebody who knows that the only interest that they're getting is interest from savings account, then that is fine. But do your due diligence and check those calculations before you click accept. I hope this has been helpful, and I hope that your tax season will be easy and flawless. Peace.